Hi, welcome to the video day, which is on the subject of holding profitable trades for longer and not banking them too soon. And most traders, particularly beginners, have a problem holding profits. Very often what they'll do is they'll snatch the profit early. Deep down, they know they're doing the wrong thing, but they do it and the trend continues the way that they thought. They also do it in terms of moving their stop too close to the price action. Deep down, very often, they know they're doing the wrong thing. They still do it. They get stopped out. Then the trend turns around and goes the way that they thought. Now, in terms of the psychological problems of holding profits, we're going to go through them in this video and how to mitigate them so you can hold your big winners for longer. Now, I would actually say that in terms of holding profits, it's far more difficult than taking losses. Yeah, when you've got a stop in place, you know where you're wrong, you're out, it's a predefined risk. When you've got an open profit in the market, you don't know how far it's going to run. You want to get as much money as possible from the trade, but it's open-ended, okay? Now, in terms of the psychological problems of holding profits, I just want to show you a video clip. Now, in terms of this video clip, it reveals the first psychological problem. Note in the clip, when the sample of people are asked the question the first time round, they give the correct answer. Then they're asked it in a different context and they all give the wrong answer. I'm just going to play this clip. It's only a couple of minutes long. Take a look at it and then we'll be back to discuss in more detail.
We asked shoppers in a Chicago mall if they would prefer $100 in a year's time or $102 in a year and a day.
I'll take the $102 in a year and 1 day.
$102.
Year plus a day.
And then I can wait that extra day for the $102.
Yeah, for extra $2.
Yeah,
it really won't make me a difference.
I would do the 102 a year and a day from today.
They all made the rational decision.
What's 1 day after a whole year of waiting?
And chose the larger amount. Then they were asked if they would prefer $100 today or $102 tomorrow. The larger amount is still the rational choice. So what did they say?
Oh, I'll take the $100 right now.
I would take $100 today.
I would prefer the $100 today.
Today.
I'm taking $100 today.
The desire for a quick reward
$100 today.
trumps their rational self-interest.
There's something called present bias, that if we have the option of something right now, it's very tempting to go for it.
Hi, welcome back off that short video clip there. Now, just before we go and look at some charts and some tips in relation to holding your profits for longer, I just want to make a couple of points. First point is the guy at the end of that video is a guy called Richard Thaler. He won the Nobel Prize for his work in behavioral economics and investor psychology. He's got a great book called Misbehaving. If you want to avoid the psychological traps of trading, including banking your profits too soon, go and read the book. Now, in terms of the second point, pretty obvious, really. As humans, we are wired to want to have a quick profit, okay? Now, this obviously happens in the Forex markets because we can take our profit whenever we wish. Now, I'm going to go through some charts and tips on holding profits, but just one simple tip first is if you want to stay disciplined with your trading, do not look at price action too much. Too many traders sit around looking at a price screen. As soon as you do that, you get emotionally involved with every twist and turn in the markets. Your emotions will very often get the better of you and you'll snatch a trade in, even if no important levels of support or resistance have been violated. Just watch price action a few times a day. We do it 3 times a day. That is enough in my view. You want to stay away from looking at price. Right, now let's go and take a look at some charts and tips on maximizing profits. Right, we're on a chart of Euro USD. I just want to go through trailing a stop loss in a moment on a sample trade, but just go through these points here. In terms of holding big profits, you've got to keep in mind noise levels. Now, in terms of this is a daily chart of Euro USD. Even in sort of trending sideways, low volatility periods, you've got basically candles, 50 to 100 pips, okay? And that's noise. It's nothing more than that. So you need to be outside of those noise levels. I know a lot of people say you can trade with 50 pip stops or whatever. You can't. Most professional traders will basically use daily levels, and they will use sensible stop losses. Okay, obviously you're going to hopefully compensate with big profits on the other side. Now, in terms of risk to reward, we would normally aim for a minimum of 3 to 1, then 5 to 1. Okay, now in terms of this, if you aim for 5 to 1, okay, you can get 4 trades wrong, 1 right, you break even, get 2 right, and you're well in profit. Okay, just before I go on to the next point 4, I skipped out point 2. Stops and round numbers and obvious levels. Now, round numbers are very important. Yeah, the big levels like 109, 108, 107. Why? Because retail traders have a tendency to put their stops or even their entries on or very close to round numbers within a few pips. So tend to have a lot of order flow around round numbers. So if we're placing a stop behind a round number, we're going to give it room to breathe by at least 20 pips, normally 30 pips, so we don't get caught in the noise as you have the orders all come in and transacted. Okay, so obvious levels, if you see a obvious level to put your stop behind, it's probably the wrong level. Okay, you want to be back from it, because if it's obvious to you, it's obvious to anyone else. What else we got? Point 4, how to get big profit targets to have confidence. Now, in terms of if we're using a stop loss of just over 100 pips, let's say, we're looking for 300 or 500 on the other side. Now, from our perspective, a lot of retail traders just think they can use technicals and they'll get big profits. Markets are driven by sentiment, and they're very noisy. So I think you need to know the sentiment, where the big money is positioned behind the chart to set a big profit target. Okay, that's just my view. If you've got a strategy already which you think you can do just technically, you can try it, but I favor obviously using sentiment first and then using the technicals to manage the trade. Getting used to profitable trades, getting stopped out. We have this a lot. You using, let's say, 150 pip stops or whatever it is. It moves in profit by 100 or so, then comes back and stops you out. Okay, a lot of traders, really hate getting stopped out of trades that have been profitable, and very often, I don't know if I mentioned this earlier, when the stock moves a little bit into profit, they put their stop right up to break even. Now, most of the time that is wrong in my view, because you're probably moving your stop to break even just for the sake of it, to prevent a loss. So more often than not, you're going to get stopped out, then the trade can go back the way you thought. I may have made that point earlier, but get used to small profitable trades coming back and giving you losses. You're focused on getting big winners, obviously, to cover your losses. Banking partial profits and re-entry. When you've got enough in a trade, you can do partial banks. Okay, I'll just go through how we do that when I do this trade illustration on Euro USD. Right, in terms of this trade, you get the big blue up. Okay, you did follow on here, and we decide to sell back through 110, 109.60. We get triggered and we go to 109. Now our stop was well clear of the high on entry. Okay, so where do we want to move our stop to? There's the first level of resistance still. Okay, very often when you see big blue, big red, you get another try at the round number. It doesn't happen in this occasion, but we see that's first level resistance. We will still leave our stop behind the tail, second level. Okay, then we break down the next day. Now, in terms of the breakdown, we go just through the next round number by a few pips, 108. So we can definitely bring our stop down. Now, in terms of a level, that is first level resistance in our view. And you can see why I've drawn it. If I could get my line straight, of course. There you go. It's where we get up, find support, and the blue pushes off. So that's first level. We're going to leave our stop back behind the second level, which is going to be behind the round number. Okay, so we're giving it room, but then we follow through again so we can bring our stop down. So if we just do that, in terms of first level resistance, and we've taken out the 109 level decisively, it's going to be 108. But that's first level. Where's second level? Second level resistance is where I said the obvious level was before. So we're going to leave it back behind this level. Okay. Then you can see a little bit of choppy price action going up to the 108 level, through the 108 level, maybe collecting a few stops down. And then we eventually break through 107. Okay, so then we can move the stop down again. It's this one that moves away from the 107 level, which we think is important. So there is the round number. That's going to be our first level resistance. Our second will be on the 4 bodies here. So basically back from the round number. Okay. So we're giving it, breathing space, the trade. You have to be patient when you get, this sort of bit of choppiness and so forth. Now, in terms of what we can do is we're right on around numbers. So if we want, we can bank half our trade and come through the other side, 105.70. But only lose 30 pips doing that. We've got half in the bank. And then if we rally up to 107, we could place the trade back in at a better price, okay? So we like doing partial banks. That's just one example. Another example would be if we get really big volatile move in our favour and our trade becomes a little bit overbought in the short term. We'll take half in. If it carries on, we're still in. We can drop the other half back in on a retracement. Okay. Now in terms of this one, we're looking for a big move to the downside. We've got the 102 level in our sights. Okay. Now, if we do go through decisively the 106 level, again, you've probably got the gist of this already. Go through the 106 level, obviously that's going to be the first level of resistance. If there is a big red in our favour, of course, where will be the second level, I'm going to say there. Okay, so it's where the previous support really broke. You had the poke up and then look for 102. So that's the way we would try and hold big profits. Obviously, you're going to get some. Majority of your trades are basically going to end up with minor profits, or you'd be stopped out or whatever. But you just need those big winners. Okay, get a few big winners really helps your bottom line. As Ed Scota said, one good trade pays for them all, or a lot of losses. Right, that's the video for today. Thanks for watching.